Hello students, welcome to Legacy IAS Academy. In today's video, we are going to discuss about a very interesting topic going on in the field of economy, where very recently in a seminar arranged, a well-known French economist Thomas Piketty has suggested or advocated for the wealth tax to be imposed on the super rich of India. He also has talked about increasing the what we can call as the inheritance tax as far as the super rich of India is concerned. So let us delve deeper into this particular topic and try to understand both the arguments and counter arguments for imposition of the taxes or the abolition of the taxes and the rationale behind it. Now, if you try to understand the context in which we are discussing today's issue, so what Piketty has said that India should tax its super rich, or we can call as the ultra high net worth individual UHNIs, given its high level of inequality. Now, what is the extent of inequality in India? We are going to discuss briefly. But first, if you understand, he also has talked about this in the context of a pledge that is referred as July pledge taken by the finance ministers of G20 group, of which India is a member of. And basically, this pledge was in the area of cooperating to how tax the largest fortunes of the world, including in India, in most effective manner, because this is something that is going on all across the world. When we talk about the 1%, top 1% and 99%, the kind of inequality, the extent of inequality which we see is of tremendous nature, and this creates a mindset, or we can say a feeling among the masses, that there is a kind of discrimination that goes on when the government made policies or make tax related policies for the super rich and the what you can call as the middle and lower classes. Now, if you talk about the discussion, it was going on in what you can call as a seminar that was arranged by Research and Information System for Developing Countries (IAS) and the Delhi School of Economics in the capital city of Delhi. Now, Thomas Piketty is a well-known economist who is known for a very good book, or we can say well-known book, especially in the finance world or the economic world, that is Capital in the 21st Century. So, if you take a look at the great divide between rich and poor, first if you look at the world itself, if you talk about the world, richest 1% of the world have more than twice as much as the wealth of 6.9 billion people. That means we can say almost 99%, because the world population today stand at 8.2 billion. The 22 richest men that you have in the world have more wealth than all the women in Africa. Plus, the inequality we see in terms of gender as well, because men own 50% more wealth than the women everywhere, and the total value of women's unpaid care work to the global economy is $10.8 trillion per year. So there is a great divide not between the rich and poor. There's a divide we see also on the basis of gender. If we talk about the billionaires that we have in our world, overall 2,153 billionaires have more wealth than 4.6 billion people, making up 60% of the planet's population. Now, what about India? If we talk about India, the wealth of 63 Indian billionaires is more than the union budget of 24 lakh 42,200 crore rupees that was passed in 2018 and 19. You can understand, this is the budget, this is the outlay that government plan to spend in a particular year on the entire country, and that is less than the wealth of only 63 billionaires of India. So this is the kind of inequality that we are talking about. If we talk about the richest 1% of India, they hold more wealth than they had more than 4 times more wealth held by the 70% of the population of the country. That means 953 million people. So not only in the world but even in India, if you talk about, this is the Oxfam's data which we are talking about, the inequality is of glaring nature. This is something that has been verified by another organization also, if you talk about the CRISIL. So as we can see, richest 1% of India, what is their share in the wealth? 51.5%. And then remaining 99% of people have 50% of wealth with which they try to survive and live by. So this is what we can call as the plutocracy. 10% talk about they hold 77.4% of national wealth, while the poorest 60% have to do away with only 4.7%. So that is the kind of inequality which we are talking about, and it is in this context of the glaring inequality Piketty has advocated of taxing the super rich. When we talk about super rich, we're talking about the top 1 to 3% of the India's population. We're talking about the ultra HNIs. We're talking about the billionaires of India. Now, in case of India, the extent of inequality, he has also talked about same, that is about 10% of people hold 55 to 60% of the national income. It's not about wealth, we are talking about the annual income. There also we see the glaring inequality. 50% of the bottom population of the country has income of only 10 to 15% of the entire national income. And that is why he said that when we are comparing India, you cannot compare it to the European countries or China, because the level of inequality even in China is not as worse as we have in India. Rather, India is similar to what we can call as countries such as Brazil and Mexico, because they have the similar kind of income inequality. So it is in this context he has suggested the remedial measures. Now, what we can give the arguments that we should impose wealth tax or we should impose inherit tax. So he has given the argument in simple way that by doing so, we will be able to increase our annual revenue worth 2.73% of its GDP. This can be done only if we are able to impose 2% of wealth tax on the people. We do not have to impose 10, 20, 30%, but even by imposing 2% of wealth tax on the super rich people, India can increase its annual revenue significantly. Second, he said that when you're talking about the assets of the people, this should be imposed on who? He said that the criteria should be 100 million rupees of the assets, that is equivalent to 1.18 million dollars, that is US dollars we are talking about. So only on those people this 2% wealth tax should be imposed. Second, if we talk about the inheritance tax, he has said that inheritance tax should be 33%, and not on all the property, but on those property which is at least worth the same amount for which we are imposing the wealth tax. And the richest 1% of India's population controlled 22.6% of the national income and held 40% of the nation's total wealth. And it is due to this region, this point of his, he believed, this argument of his, he believed is justified to reduce the inequality, and not only reduce the inequality, but also it will boost the growth of the country, the economic development of the country, and it will add to the kitty of the government of India's revenue. Now, if the concept of the Thomas Piketty is nothing new or novel, rather it derives from the concept of progressive taxation, which he himself has said that it was something that became very successful in the northwestern Europe and the western Europe. He has given the example of countries such as UK, you have Norway, Sweden, Scandinavian countries we are talking about, we have France, Belgium, then you have Spain, then you have Germany. So these countries in the 20th century had a similar kind of inequality as we see in the India, Brazil and Mexico. And by imposing this kind of progressive taxation, by imposing high rate of taxation on the high incomes, inheritances and wealth, the countries have been successfully able to redistribute the resources and reduce inequality. And that is why if we follow the similar model in India, similar kind of outcome we can expect. So that is his valid ground. Now, this is something that was done in the 20th century of India, and it has a lot of resemblance with the 20th century Europe, and this has a lot of resemblance with the 21st century of India. That is where we're talking about the similar measures. Now, since then, European countries have also changed their taxation approach. If you talk about Norway and Spain, these are the countries where you still have some forms of wealth taxation, wealth-based taxation. But many countries, if you talk about France, they do not levy wealth tax on all kind of wealth and assets. Rather, they target a specific asset. For example, if an individual has a lot of real estate properties, then obviously after a certain amount of value, the taxation is done in the France. Piketty has been advocating wealth tax on the ultra rich. Largely, what is the objective of taxation? One obviously is to reduce the inequality, but it is not only simple redistribution that you have to do, that you tax the super rich and then distribute the money to the poor people or the lower section of society. Rather, the money that is received, the revenue that is earned in this manner, he believes should be used for financing of social infrastructure. Social infrastructure largely refers to the healthcare sector. You have drinking water supply, you have education. So this will not only improve the living standard of people, but will also make them more empowered to change and transform their life, thus increasing, or what you can say, rising further up in the ladder of economic affluency. So this is how we can explain the approach. Now, this is just to give you an example. If we talk about the tax rates of the European countries, as we have discussed that the Scandinavian countries, by following the model of social democratic principles or social democracy, they have one of the highest tax rates you can see. The highest tax rate you see is in the Finland, in the Sweden, where they have 52.3%. In Finland, you have 51%. So similarly, many of the Western European countries, Luxembourg, Germany, we have talked about, they were able to reduce inequality by imposing higher tax on the super rich. However, there are certain valid grounds also on which economists argue that if we take a similar kind of approach, many problems in India we will have to deal with. Or even if we talk about the European countries, as I told you, that many such countries have rolled back their progressive taxation system like wealth tax and inheritance tax. The reason was that the countries began to witness a large extent of capital flight and tax avoidance. Now, large extent of capital flight means what? Means that the super rich people did not wanted to remain the citizen of that particular country due to the high taxation. Rather, they have shifted to some other countries and they were able to take the what you can call as the residency or the citizenship of other countries. So it has led to the complete flight of the capital or complete what you can say removal of the money from that particular country's economy. Second, once people understand that the taxation is unfair or there is a larger extent what you can say higher degree of taxation than they believe should be the what you can call as the norm, so in that case they start to avoid tax, and due to this it is administrative difficulties in valuing the wealth accurately. That also causes problem in ascertaining what should be the actual valuation of tax. And third, shift in economic policy toward less redistributive models also have caused the country to shed the progressive system of taxation, because rather than country or the government being the messiah of downtrodden or being or has been seen as having the responsibility to take care of the people, it began to take a human development approach that is called as empowerment approach, where countries began to empower people to change their life by themselves rather than depending on the what you can call as the freebies from the government. In one way we can explain it. Now, what about India? It's not that India never had wealth tax. India had wealth tax well up to year 2015 when the government decided to abolish it. And this was because the finance minister at that time has given the argument that it is a very burdensome for the administration like central board of direct taxes or indirect taxes without substantial collections. So the effort that they are putting, the money they are spending on the imposition or implementation of this tax system is much more greater than the value of tax that they are able to collect. And also it was replaced with a 2% surcharge on persons declaring more than rupees 1 crore income. So apart from the normal slab based tax that they have to give, they also have to give 2% of extra surcharge on their income. Not only that, if you talk about the current finance minister, Srimati Nirmala Sitharaman, she also has said that if we try to bring back the inheritance tax, mostly it will affect the middle class and aspirational classes, because it will become difficult for them to pass on the savings that they might have in the form of inheritance. Or many of the people in India, they are having small land holdings. The average land holding size of India, talk about farmers especially, is 2 acre, 2.5 acre. So similar is the case in the case of urban dwellers as well. So it will have a significant impact when they try to transfer this inheritance to from one generation to other generation, which will have a negative impact on the mind and psychology of people, and also it will paint the image of government in a negative light. Now, not only that, many economists of the same panel who were part of the Thomas Piketty's discussion, they disagreed with the notion that higher the inequality, lower is the economic growth, and lower the inequality, higher is the economic growth. Now, this point that the Piketty has tried to relate to, many experts argued that there is no causal link, and still it has not been clearly established and proved that there is a link between the inequality rate and the growth rate. So, using the or suggestion of the lowering of inequality by imposition of higher tax is not good for economic growth as far as India is concerned. And this is something which has been echoed, the what you can call as the counter argument or argument against the imposition of tax has been echoed by the chief economic advisor of the India also, where he says that it will have an unintended consequence of same kind of problem that the European countries had faced earlier, that is flight of the capital from India, where the super rich will go out the country, it will drive them out of the country, and India will then be left off worse than how it is now. So what can be the way forward? Now, some of the panelists have suggested that rather than focusing upon the ultra rich and increasing the tax of, let us say, 0.04% or 0.05% of the country's population, we should focus on increasing our tax base, because we have such a humongous population, but actually the percentage of the tax paying population is still very low. And also, why it is very low? Because a lot of people, we know that they are involved in the tax evasion, where they show the reported income is much more lesser than the actual earnings. So the panelist also said that if you look at the data, it is believed that 7.5% of earners are evading tax, and among those are most of the earners are who are having more than 10 lakh of income. So if you're able to bring even this much percentage of people in the tax bracket, or if we are able to ensure that they are not able to evade the taxes, obviously our revenues will show up, which we can use for investment in the social infrastructure as well as the economic infrastructure. If we try to understand here also that how the changes are taking place, now interestingly, if you look at the direct tax we're talking about in terms of tax to GDP ratio from 2011-12 till 2021-2022, if you look at a 10-year time period, interestingly you'll see that the tax to GDP ratio has remained almost same. That is 5.5, 5.6, in the range of 5.9, 6, back to 4.8, back to 6. So this is something that does not basically agree with the economic development or the growth that we're seeing in India, because we have raised so many people from the what you can call as below poverty line to the middle section, and many of the middle income people have migrated to the higher income group, but still the tax ratio is not changing. So this is because of the problem of low tax, what you can call as the narrow tax base of India. Second, if you talk about the cost of collection, it has however declined on a positive front. So 0.6 to 0.5, to some extent of decrease we can see, especially however in recent time you see the percentage of tax collection, the cost of collection has declined. That is largely because of the implementation of the electronic system, where you have very simple way of filing for tax reports or tax returns and all that. So the main focus of India should be to increase our tax bracket as per some of the experts. So this is all about this particular video. I hope you got an idea about both that why imposition of wealth tax is good, how it can be good, or how it can cause adverse impact on the overall economic health of our nation. That is all for this video. Thank you very much.